Hello traders, this is Blake Morrow with ForexAnalytix, and this is your week ahead video for Sunday, April 30th, 2017, and I want to welcome you. Now, I've got so much to talk about this week. It is jobs report week. We have NFP, but there's so much on top of that and so many charts I want to get to. So before we get started though, I want to make sure that I do tell you guys, sign up for ForexAnalytix. You can try it. $1 for 10 days. $1. It's cheaper than taking your kids to get bubble gum at the supermarket. That's correct. Just go ahead and try ForexAnalytix. We're assured that you will love it, and once you do, make sure you download the mobile applications from the Google Play Store or the Apple iOS Store. Okay, now that I got that out of the way, we got so much to talk about, so let's get to it. So first and foremost, I got to talk about the way the pound closed at the end of the week. If you look at the pound dollar, or actually, take that back. Let's take a look at the pound yen and take a look at this reversal. Now, the thing that you might notice about the pound yen is we had this triangle defined by the blue line here and the red line, and we had a false breakdown. You can see that false breakdown. Once we did a false breakdown and reversed, when you get a false breakout, whether it's breakdown or breakout, the reversal is pretty nasty, more times than not. And this is no exception. The pound yen has closed above the 618 retracement. If you look at the weekly chart and the weekly candle, this is a Morrow closing white candle, which is extremely bullish, and it's a breakaway gap. I mean, and then you take it on top of the pound at the end of the week. The preliminary GDP numbers came in weaker than expected, and it just squeezed the hell out of people. So, people are looking for reasons to cover the pound. Whenever something goes up on bad data, that's not a good sign if you're bearish. It's a very bullish sign. And you can see it in the pound yen, and you can see it in the pound dollar too. I mean, if you go over to the pound dollar, let me just pull it up really fast. In the pound dollar, I mean, we have a bullish pennant that's working our way higher. I mean, that's an extremely bullish chart. I mean, it targets 132 or just shy of 132, and you got to imagine there's stops above 130, the round number. We've closed, in breakout territory here. It just looks extremely bullish, and that's the pound. Okay, and the pound, just so you guys know, the UK PMIs are all weak this week. We've got construction PMI, services PMI, manufacturing PMI. We have all these PMIs. The PMIs last month came in pretty weak. So if for some reason they come in a little better than expected, I mean, this pound could really accelerate higher. All right, so just something you need to pay attention to. That's the cable. Now we have other things that we need to talk about. We have Chinese data, and at the time of the filming of this video, it hasn't been released yet, but Saturday night, there is Chinese PMIs that are being released, and that could affect the market. And it really could affect like the Aussie dollar. And let's talk about the Aussie really quick. Now the Aussie, if you look at the chart, it looks like it's breaking down, but we might have posted a false breakdown. That's something to pay attention to. And if the Chinese PMI data comes in a little stronger than expected, we might get further ramp up in the Aussie going in early into this week. But on top of that, Monday night, we have the RBA rate decision. Now, one of the things that I should note about the RBA, even though they are expected to keep rates unchanged at 1.5%, is that inflation's starting to pick up, and that's good for the RBA, because the RBA was probably getting a little concerned in recent months with weaker inflation. But now that inflation is starting to pick up, and we've seen that just over the last couple of weeks, that might give the RBA reason to be a little bit more hawkish. And so if that's the case, this false breakdown that you see here technically could take us, back towards 75.20 or 75.50. We break above 75.50, and then you break this down sloping trend line, and next thing you know, the Aussie's going back to the top end of this range, this big range that you see here. So that's the Aussie dollar, and we do have a lot of data coming out in the Aussie. Now, speaking of its little brother, little sister, the New Zealand dollar. The New Zealand dollar closed in breakdown territory. You can see it below this support zone in the Kiwi. It's a pretty bearish move. We have employment data for New Zealand on Tuesday. We also have on Tuesday we have dairy auction results. Now, if the New Zealand dollar continues to underperform and then the Aussie gets a little bit of a boost the night before from the RBA, and I'm just speculating here, but if it does, well, then you have to start looking at the Aussie New Zealand currency pair, which, by the way, and I'll pull it up right here. The Aussie New Zealand, it looks pretty stout. It's this you could argue that this is a bull flag formation, something that looks like this. And if it breaks out, I mean, we could really be trading towards like 112 or something, and that's without measuring. I'm just kind of giving you an idea of what might happen. All right, so some pretty big strong moves that are developing here now. One last thing I'd like to go over well, actually, there's two other things. Let's take a look at the dollar index. So if you're looking at the dollar and you wondered why it was so choppy this week, well, the dollar index, as I wrote in, and I did the analysis here, it's stuck between a rock and a hard place. You can see it right here that I wrote on the analysis of just wrapping up the week here. But what I'm going to show you is we have this triangle pattern defined by the red lines. You can see the triangle. We broke down, right? Following the French elections, the dollar broke down. But did we really break down? I mean, you have this lower trend line here that's holding us. So we've been in this tight range all week, this last week. Now, coming out of a triangle, I suspect that we're going to break to the downside, but we're also, you can see we're hugging this 200-day moving average. We're just below it. If we break below this blue line, I would expect downside to really pick up. Okay. And if you think about what's happening here in the next couple of weeks with the second round of the French elections, if Macron, takes the presidency in France, that's probably going to further boost the euro, which is going to weigh on the dollar index as a whole. So the dollar index could possibly break down even further. But keep it on watch, because we break back into the triangle. That's a false breakdown out of the triangle. Then that's very bullish for the dollar. The flip side is if we break down through this blue trend line, that's going to be bearish for the dollar. So just something to pay attention to with the dollar index. Now, one last thing I wanted to show you is I want to take a look at the gold market. Okay, the gold market also stuck between a rock and a hard place here. You got this multi-year trend line, and by the way, this trend line that you see here in blue, this stems all the way back from 2011, so it's major, and it capped us last week. And we are stalling. We're not breaking out, and we've pulled back from that. But we're also holding the 1260 major breakout point, which between 1260 and 1300. Gold's going to break. It's going to break lower or it's going to break higher, and I would suspect it is opposite of whatever the dollar does. But you got to keep an eye on gold, because if we do break above, like, let's say 1285 and then 1300, gold is going to have a massive squeeze. And I know a lot of gold bears out there. There's a lot of them, and I'm not a gold bug by any stretch of the means, but I can't ignore the fact that the pullbacks have been shallow and it's holding up pretty well. And with all the geopolitical risks around the world, equity markets that may be somewhat elevated at this point, with the political risks surrounding France, you never know. I mean, gold could be that safe haven, go-to quasi currency that people run to if things get a little hairy in the global environment. So just keep an eye on gold. I think gold is poised to move here, whether it's up or down. Obviously I'm not a gypsy or a palm reader, but I would venture to guess that we're probably going to be breaking out soon. And I don't think you need to be a fortune teller to figure that one out. All right, last but not least, guys and gals, if you haven't done so already, we are really just a couple of weeks away from our giveaway. So make sure that you send in to the email, which is giveaway@forexanalytix.com. That's an example of well, it's my trade setup, but you get a T-shirt. You could win a mug and mouse pad and a hat. But the grand prize winner goes to the silver dice. We'll be selecting 6 winners. Every one of our team will be selecting somebody, and then the person we all choose to be the grand prize winner will get the all silver trading dice, which are really cool. So make sure you get your entries in by May 11th. So take a picture of you and your trading station. Get that into giveaway@forexanalytix.com, and because you don't have to be a subscriber to win. And also make sure you're listening to our daily webinars hosted by the one and only Dale Pinkert, Forex Stop Hunter. Those daily webinars are at 9 a.m. Eastern every single trading day. You guys have a great weekend. Thank you very much for being here. Thank you very much for listening in. I will see you next week. This is Blake Morrow with ForexAnalytix. Have a wonderful day.